Morning, everybody. Welcome to Canadian Mortgage Weekly, episode 15. It is our 15th consecutive episode. Thank you for joining us at our new time, which is going to be Thursdays at 11:30. Again, as always, we are joined with Joe Bladek, who is a mortgage professional in the Barrie Simcoe area. But again, we are serving all of Ontario. Joe is the mortgage man. If you have any questions, any type of mortgage. Joe is extremely passionate about mortgages and getting you into a home. He loves the finances of it. So it's really great to have you with us this morning, Joe. Thanks for being on.
Right on, Sam. Thanks so much for that great introduction. And yes, episode 15. I'm really, really pumped about it. And yes, I love mortgages. Thanks for that little tidbit there. Whenever I'm chatting with the client about their mortgage situation, I get really pumped and really jazzed about what we can do for them and how we can change their lives, whether it's refinancing their debt or consolidating things or giving them the equity that they want out of their home to pursue, like a rental property or cottage, just all those options. And it's really exciting because every file is different. And as you know, Sam, it can get sometimes stressful. So, being able to just be in our client's corner during those times when it does get stressful, it's a nice feeling to be able to back our clients up with their mortgage applications. But yes, back at you, Sam. Thanks for joining us today as well. Episode 15 on Canadian Mortgage Weekly. Sam Thompson, if you don't already know, he's been a mortgage agent now with Mega Mortgage for over a year now, and he's been rocking and rolling with us now, working on people that are first-time home buyers, or people that are looking to refinance, renew their mortgage as well. He's done a great job with all that, and with Sam being on the show now, I know that we love having you on here. Well, I love having you on here because you bring a lot of good knowledge to the show, and also some of the background on Sam. If you don't already know, he's originally from Ottawa. He moved here to Barrie, and he now lives here in Barrie with his wife Grace, and he's all into folk music as well. So if you are looking for a mortgage and you like folk music, Sam is the person to chat with. And Sam, great to have you on the show today. And I'm looking forward to chatting about what we're chatting about today with you. And hopefully we can give this information to our clients and some of our partners and tell them what's going on.
Yeah, absolutely. Thank you so much for that introduction, Joe. Yes, we do have a very exciting episode. We're going to be covering off some news that you may have heard of or may have seen. So we're going to dive into that in a bit better detail. But before we get too carried away, I do want to note for everyone to stay tuned because today is the day that you guys have been waiting for. If you've been watched our last 4 videos about our refinancing, about for lower payments, to save money, to purchase an investment property, or for home improvements, you'll also know that during that series, we were inviting anyone to comment a question, to share the video, or to privately message us a video for an entry to win your $100 e-gift card to a retailer or a restaurant of your choice. Whew, it's a mouthful, but we are doing the draw today. So if you are part of that draw, if you've commented a question, please stay tuned to the end of the video when we get to announce the lucky winner that gets that $100 gift card.
That's awesome, Sam. Yeah, a great reminder there. I'm looking forward to giving away $100. We have a few entries there, so I'm looking forward to that. And I got my snare drum ready to go for today's drum roll. Awesome. Great. So I guess we should get right into the news, shall we?
Yeah, that sounds good.
All right, everyone. So this week in mortgage news, what's happening? I'm sure a lot of you, well, maybe not all of you, but I know Sam, myself, and Terry Lynn at the office, we all stay on top of the mortgage news. And there's been a lot of news in the mortgage market this week. And I'm sure that it's probably going to be something that you all can relate to. And that is, there is a lot more listings popping up on the market right now. I don't know about you, Sam, but walking around my neighborhood, I've seen a lot of for sale signs pop up in the last probably week or two. Haven't you noticed that?
Absolutely. I think we started to notice the trend maybe a couple weeks ago that there was some more popping up here and there, but it definitely hasn't slowed. And yeah, there is a
Yeah.
lot. And I always find I'm pulling out my phone to see what's the list price, how the market's going price wise, with all of these, new additions to the housing market.
Yeah, you bet. And with the new listings right now, Sam, that has been the caveat, not having very many listings on what has been driving all these bids over asking and all these crazy house prices that have been going on. So everyone now has seen, wow, I can get 600, 700, 800,000, maybe over $1 million for my home right now if I sell today. So this has been all over the news for the last January, February. Everyone's finally catching on, getting their houses listed. And now there's all this extra inventory on the market where there wasn't before. And that will, like the supply of low inventory, as you remember, Sam, we had real estate professionals join our show earlier this year, and they all talked about how there was low inventory across all Ontario markets, and that was driving up prices. Well, right now, there's extra inventory, and that's not a bad thing. I think that we are seeing some articles now saying, housing softening, things like that. But this is not a bad thing. What's happening right now, it's not a softening, it's more of a balancing out of a very hot market.
Mhm.
And with these extra listings now, people, buyers, first time home buyers, move up buyers, move down, downsizing buyers or investment buyers are seeing the extra supply hit the market now. Real estate agents are seeing all this activity now. They're pushing all these homes onto the market, and it's giving a lot of people more choice. And when you have more choice showing up so quickly, I don't know about you, but if you're not in a rush to move, you might want to wait a week or two to see what else comes on the market, because you see houses popping up now once, like a few times a day, every day. So with all that extra inventory, people are taking notice, and it's definitely balancing out the market.
And that's especially helpful, as we've noticed with a lot of the first-time buyers that are reaching out to our office with, the sort of median salary, the minimum 5% down. We've been chatting about it for the past few weeks that they almost seemed a little boxed out of the market because everything was going so much higher. So do you think that with this balancing, we're going to see more people able to actually purchase and enter the market as first-time buyers?
I think so. I think so. I actually had a conversation. I'll give a big shout out to Tom Barbaro out of Hamilton, part of Judy Marcel's Realty in Hamilton. We were chatting about the market, and what he's noticed is that he's seeing a lot of offers come across the table where they have financing conditions now, and they have home inspection conditions now. They're coming closer to the list price, and that's a good balancing thing for the market. Like there's still a little bit over list price, maybe 10,000 over for a lot of these offers, but that gives buyers an opportunity to see what they're pre-approved for today, and to know that what they see on realtor.ca is going to be very close to what they're going to pay for now. Whereas before, we saw a lot of real estate agents take a client out, they're pre-approved, say for 600,000. The client wants to then see that house price of 599. But then the real estate agent has to do the explaining of, well, even though the house is priced at 599, it's going to sell for 750, maybe 760. We don't know for sure, but it's not a house that you can look at. So it's going to give a more realistic market and a very much more balanced market.
Mm-hmm. And I know that that's definitely a great relief across the board. I mean, it makes our job a bit easier that, again, like you're saying, what we're forecasting buyers will qualify for, that will likely translate into what they're able to buy. And I'm sure that the real estate agents are loving not having to explain that again, that they're having to look, 200,000, almost 100,000 below their maximum qualification.
Yes. Now, on the flip side, Sam, sellers might get a shock because,
Right.
if you're looking to sell your home now and you are expecting to list it for 600,000 and get 750 or 760, that may not happen anymore.
Mm.
And that actually has happened was happening in a few markets across Canada where, traditionally for the last few months we've seen an offer date say this house is listed today, but the offer date will be on April the 20th. But April the 20th comes and goes, and the offers are not 100,000 over list, or they're not 150,000 over list.
Right.
And the sellers then are like, why is this offer at list price? You
Mhm.
know, why are they only offering what I want for the house? And they're getting disappointed by that. And that's
Mm.
really frustrating for a lot of sellers because they've seen how it's been for January, February, and part of March. But now it's becoming a more balanced market and more realistic. And yes, it's going to create a lot of stability for buyers right now as they go out shop for homes, as you're saying. So with all that, it's interesting to see what's going to happen in the next few weeks now, few months now, now that the market has balanced out a little bit. Because as you know, Stan, we see it real time. The news articles that come out, they're chatting about past sales data. We just saw Simcoe County release their average house sale price of 757,000. It's a
Mm.
very high sale price. And you know what? That was March figures, and we're already halfway through April. So, and the market's changed considerably since then. So
Mm.
it's going to be interesting, like I'm saying, to see what the government will do. They've been talking about cooling down the house market from some measures that they may implement. And I know we're going to get into that in a moment, Sam, but it's going to be interesting to see what they will do now, and if they are going to take into account the current balancing out as we speak.
Hmm. Yeah, I think a lot of people have been looking to see, what's to come. I know that I've seen a number of articles that, people are asking for, maybe new policies. I know we've heard things about, capital gains tax and all of these different things, but there has been one news update that I think a lot of people have seen regarding the stress test and the qualifying rate.
Mhm.
So I guess we can jump into today's sort of main topic and presentation. I can run through that. And we can chat a little bit more about what this stress test update is, who it affects, and just looking at some comparisons with the new rate change.
Yeah, that sounds great, Sam. I'm really looking forward to this presentation. And for any of you viewers out there, give us a question below, chat
Mhm.
real time. We want to be able to have this conversation with you real time, or if that is something you want to do privately, send us a message over social media, email, or text. So yeah, Sam, go ahead. We're really interested.
Okay, awesome. So looking into the stress test update here. So again, it's proposed to take effect on June 1st, 2021. So just before we get too much into the different changes, for some of you who may not know, what the stress test is, they don't really know the function of it or how it works. Essentially, it's just a way that your mortgage provider will test any prospective borrower with a higher mortgage interest rate. So this means that you'll still again get the day's low rate. Usually it's been around 2%. I think now we're seeing around 2.9, 2.4%, maybe a little higher. But you'll actually be qualified when we're running your application at a higher rate. Currently, it's at 4.79, which is the Bank of Canada's current benchmark rate, or the alternatives to do the rate that you're listed, or sorry, that you're being tested at plus 2%. So really this isn't something new. It's something that buyers have been working with for the last number of years to see, what they qualify for. And that might, give you an indication, especially if you are someone who has purchased in the last few, years, few months. It's definitely something that you were aware of when you're noticing that you're qualifying for maybe less than you thought you would. So let's just look into what that change is and what we're seeing happening. So as I was saying, most buyers are being stress test at a qualifying rate of 4.79%. So what the change is that as of June 1st, 2021, that qualifying rate is actually going to be increased to 5.25% for any buyers that are purchasing with 20% down. So again, at the start of this video, me and Joe were talking about the very hot market that we're seeing, and everyone's wondering, how are they slowing it down? Is there any way that they can cool this market? Because it's just been record heat, right? Like starting in from January, we've seen how sales, going crazy above list price. All of these, every article I've seen has some sort of adjective describing how hot the market is. So it's definitely been on everyone's mind. So this is an attempt to help cool that market for anyone purchasing with over 20%, which typically is going to be somebody purchasing a secondary home, a rental property, or anyone refinancing.
Great.
So just chatting about who it affects, again, a lot of the first-time buyers that our office works with, typically getting into their first home, their down payment is going to only be around 5%. They're going to stick to that minimum amount so that they can help offset the other costs that come along with entering the housing market, such as your closing costs and all of that excess financial costs when you're getting into it for the first time. So we're expecting that not a lot of first-time buyers will actually be affected by this change because it is still an insured mortgage. But if you have been watching our last 4-part series about refinancing for any reason, for home improvements, to buy an investment or a second property, to just consolidate debt, typically those people are going to be the ones that are most affected because they will be putting 20% or more down in the refinance using their existing equity. Yeah. So it's definitely important. Sorry, Joe.
I'll just, as you're chatting about this, I'm thinking about what other people have commented to me about as they've asked us about this stress test. And it's interesting to see how it's the people and the folks that have more money as a down payment that it affects more. And it's almost like everyone that has 20% down or more, it seemed to them, I always find that clients, when they speak to us, oh, we're putting 20% down. It must be a very secure mortgage, right. But it's actually, in this case, they're being penalized by putting extra money down.
Mm-hmm. Yeah. It's definitely put the market in an interesting place, especially when you take into account that anything below 20% will also incur mortgage insurance premium that you have to pay on top. So it definitely, in one way pushes you to not put 20% down if you are a first-time buyer or, purchasing a home. And let's just look at a quick comparison of what it looks like at the current rate in the left-hand column, and then we'll look at what it roughly, calculates down to at the new qualifying rate. So for this example, these prospective homeowners, both have an annual income of about $100,000. They have standard, around $15,000 in debts that they're repaying in, maybe credit cards or a line of credit. And they're both able to contribute 20% for the down payment, whether it's, for a secondary home, or if they're getting into the market for the first time and they have, spent this time saving enough to be able to put 20% down. You'll see that at the current qualifying rate of 4.79, the maximum purchase price they can expect would be about $555,000. And you'll see at the new rate, that purchase price is actually limited now to $530,000. So it actually works out to be a difference of about $25,000. So that may not seem like a lot, but especially if you're looking at refinancing for an investment property or even to consolidate debt, being limited by that extra $25,000, it could actually, hurt your plans, especially if you're looking. I know we have a lot of people that when it comes to renewal or they're looking at a refinance, they want an extra $25,000 to redo their kitchen. So it's definitely going to change the plans of, prospective buyers and anyone that's coming up for a refinance, that's looking to really capitalize on that existing equity that they have.
Yeah, it really will. Sometimes for a refinance, the clients may have a certain amount of equity available, say, to refinance their debts, and now it'll be, possibly 25,000 less, like you're saying, Sam, and that sometimes may not it will not be enough to consolidate everything the clients want. And what happens in that case is that if there's a car loan remaining outstanding with a $500 a month payment, then we can pay everything else out. But because the car loan is still there, the bank may see now, oh, we can't pay out that $25,000 car loan because of this new stress test. And because of that, now the ratios don't work and we can't do the whole mortgage altogether. And the whole file can fall apart just from not being able to have enough equity available to refinance. So this will definitely cap people's equity that they can take out of their home.
Yeah, that's a very good point. Yeah.
So yeah. And I like seeing this the way you've described it there, because it really puts into perspective, someone that is out there considering refinancing, maybe they should get started sooner rather than later.
Absolutely, yeah. So let's get into when it takes effect, and what are some ways that you can, get ahead of this, stress test change. So again, as I was saying, it started to, it's set to be taking effect as of June 1st of this year. But if you are a prospective home buyer, it's also going to affect based on when your actual closing date is. So, you may be able to put in an offer, in early to mid-May, but if the closing date is after June 1st, the lenders are going to be using this new qualifying rate for your stress test because the closing date is past when it takes effect. So really, in terms of, adapting to change, how this affects you, really it's just about timing, and the earlier you can get in and chat with us, the better, because we can get ahead of this change and really help you capitalize on what you qualify for now before we see that rate change. So I'll put up our contact information. You can feel free to reach out to Joe or Terry Lynn or myself to start chatting about it if you're getting close to renewal and you're looking at refinancing with this lower qualifying rate, or if you're buying a home and you are able to put 20% or more down, or you just have any inquiries, please reach out to us, either emailing us at joe@joebladek.com, visiting this Facebook page, facebook.com/bemortgagefree, or giving us a call at the office, 705-238-3497. Any of these ways, we would love to chat with you and reach out, to discuss how this affects you and how to get ahead of the stress test change.
That's great, Sam. Great information. And just to add, it's 79, not 97.
It is 79.
They might get a pizza place if they call the other number.
That's right. So it's a win-win either way.
That's right. 705-238-3479. So yes, that's great information. So if I'm looking for refinancing my house, it's better to get that started now rather than after June 1st, because obviously we're going to have an effect felt on those. I mean, this is proposed changes. Who knows? Like we just talked about how the market's already balancing out and how we're already seeing offers come across the table on our desks that have conditions in them, whereas before they were subject-free offers, and now we have subjects like financing, subjects like home inspection, condo fee, condo reserve fund, that kind of stuff. But with this now, it's almost like we don't need the extra softening or balancing, but this stress test may in turn do more than it needs to, right? But anyway, besides that, if you're looking also at purchasing a property, and you have more than 20% down, like Sam was saying, reach out to us, get started. We'll get you pre-approved ASAP so you can get out there shopping for a home. There's a lot of inventory out there, and you can definitely see that popping up. I'm seeing the signs all over my neighborhood now, and it gives you a good look at what's out there for houses. Whereas about a month or two ago, there was very, very low amount of housing. And now that we have all this extra housing available, it's really opening up the market to people that have been sort of waiting on the sidelines to see what's going on. So it's going to be interesting to see. So thanks for sharing that information. So what do we have next now?
I believe it is time to go through our draw for our winner this week. If you have the Black Beauty snare ready to go, this is going to be really exciting.
All right, yeah, we've been doing this contest now for over just about a month now. We ran our 4-part refinancing series, and we really helped all our viewers understand how it was, how they can refinance their home for home improvements, or for better rates, or for debt consolidation, or the other one was a lower payment, I believe it was, or for an investment property, actually. So thank you to our guests that were able to join us. Thank you, Sam, for helping with that series. And we were, during this series, asking you to comment or share or send a private question to us in order to be entered into this contest. So today I have my snare drum here. It's a Black Beauty, as you guys can see. It's really heavy. And then I got my Dave Grohl sticks available here today. As you see, they're a little bit chewed up here because I do like to play the drums, and I like to play them quite often. I haven't been playing them enough lately, but this is it's because we've been so busy, right? But it's gonna be great to do this snare drum roll. So I got, hopefully Zoom doesn't drown this out. Do you have the ballots ready?
I do. They're in the wooden bowl that is traditionally used. You can see them all in there.
Right on. Awesome. So we're giving away $100 gift to the retailer, the local retailer, or the local restaurant of your choice. So whoever wins, you get to pick where you get it, and we'll send that off to you ASAP. We'll connect with you and ask you what to do. Now, the winners, I wanted to say, if you do win, there's one thing we ask of you, and that one thing is that you tag our page and say that you've won the contest, so everyone can see that. Right on. Congratulations. So are you ready for the draw today, Sam?
I am.
All right, here it goes. All right.
The winner is going to be John Carlos Bonita.
Awesome.
Hey.
Congratulations.
That's awesome.
Awesome. So Sam and I will reach out to you, one of us, so we'll get in touch with you this week for that $100 gift. We're really excited that you won. Thank you very much for participating, to everybody who participated in this draw this month on our refinancing series. And Sam, we'll have to come up with a new contest for next week, shouldn't we, eh?
That's right. Yes. Now that one is ending, we need a new one to start up.
Yeah. So if you're watching this video right now or later, comment below, send us a private message. We want to know what you want to see us give away. We want to know what you guys are looking for, whether it's a gift card or perhaps an item of your choice. Let us know what is a good prize. We would love to have your feedback. And thanks for watching Canadian Mortgage Weekly, celebrating today, Sam and I, 15 episodes. Awesome. Well, thanks again, everybody. Do we have any questions before we go today?
We don't have any at the moment, but again, if you do comment, we can circle back on your questions next week, or again, feel free to private message us through our Facebook or YouTube or Twitch accounts, and we can definitely get back to you to answer that question.
Okay. Well, thanks very much, Sam. Thanks, everybody, and we hope you have